What's going on, everybody? So in today's video, I'm going to be talking about why you should invest in index funds over other types of stock investments. And just a little background, I'm not a CPA, I'm not a financial planner. This is just my own random opinion based on experience, as well as doing a lot of research. So that being said, let's jump into the video. Now, what exactly is an index fund? Well, it's basically a stock that's supposed to replicate the economy. So depending on which index funds you purchase, it could be the S&P 500, which would be the largest 500 companies in the US, or maybe the NASDAQ or Dow Jones. There's different index funds out there that basically replicate the US economy in different aspects. So reason number one why you'd want to invest in index funds is that historically they have great returns. So depending on when you start tracking and stop tracking, the returns are going to be somewhere between 7 and 12%. Which is very good. It's basically set up to model the U.S. economy. And that's a lot of stocks. If the U.S. economy's up, the index funds are up. If it's down, index funds tend to be down. However, historically, they do very well. Reason number two to invest in index funds is that it's going to save you a lot of time. So you can try to do hours and hours of research trying to find the next hot stock, or you can just invest in an index fund. And you're almost certainly going to get a better return on your investment with an index fund versus if you just try to pick your own stock. And I'll give you a couple of examples. Warren Buffett's top stock pickers oftentimes can't beat the S&P 500. And these are guys that are worth tens of millions of dollars, maybe even billions, I don't know, that spend their entire lives trying to beat stocks, and they can't even do it. And not only that, but you look at mutual funds or even hedge fund managers that get paid millions and millions of dollars. They can't beat the S&P 500. Warren Buffett actually made a bet with one hedge fund saying that him choosing the hedge fund over the course of 10 years would yield a better return than the hedge fund would, being actively managed with like a hedge fund manager who's an expert in stocks and everything like that. And the S&P 500, Warren Buffett's pick, overwhelmingly beat an actively managed hedge fund. I don't even think it was close. And they actually bet $1 million on it, and Warren Buffett won the $1 million. I think he donated it somewhere. But you see my point. For an average investor, or maybe even an above average investor, to actually beat the S&P 500 or any index fund consistently over the course of like 5-10 years is almost impossible. So why not just take the time just to invest in an index fund rather than taking hours and hours to pick individual stocks? The next reason to invest in index funds is that it's less risky. So if you just choose your one stock, maybe it'll have a great return, or maybe it might not. I have a friend that's invested in like 3 or 4 different stocks, and some of them have done really well. But then there's a couple that have like dropped in value by like half. So if you want a more stable return on your investment, you should invest in index funds. It's going to be significantly less volatile. You get more sleep at night. It'll be much better in the long term to invest in an index fund. Another reason to invest in them is that there are no fees. So oftentimes with like mutual funds or hedge funds or any type of actively managed fund, you're going to be paying a fund manager to get a worse result than if you just blindly put your money into the S&P 500 or any index fund. And it's interesting. So with stock investing, and I believe it was Warren Buffett or maybe Charlie Munger that said this, it's the only thing where you're paying a professional to get a worse result than if you just did it yourself. So you could take that example with anything. You could go to the dentist and you'd pay a professional, but they would probably give you a better result than if you just tried to like yank your tooth out yourself. You'd probably save some money doing that, but it wouldn't be the best outcome. However, with stock investing, if you're paying a professional to manage it, outside of like Warren Buffett and some of these guys, you're almost certainly paying them to get a worse result for you than if you just put it in the S&P 500 or any index fund. So there's no fees or very little fees associated when investing in index funds. The next reason is that by investing in an index fund, you're going to be much more tax efficient than if you try to buy a stock here, sell a stock when it's high, and you keep buying and trading stocks. You're going to rack up capital gains fees, trading fees, different fees associated with buying and selling stocks. So if you just buy one index fund or just buy a couple index funds and just hold them for the long term, you're going to save a lot on the capital gains and trading fees that are associated with that. So thanks for watching this video. And if I were to summarize just in a few sentences on why you should invest in an index fund, number one, because Warren Buffett overwhelmingly says you should. And he's the greatest stock investor of all time. So you should probably listen to him. Number two, you're going to get historically higher returns than if you were to pick stocks yourself or use any type of actively managed fund. And number three, it's easy. You're going to save hours and hours and hours of time just by investing in an index fund versus you trying to somehow beat the stock market yourself. So those 3 reasons should be more than enough to invest in an index fund. And I'd love to hear your opinion on this. So if you agree with me or disagree with me, definitely drop it in the comment section below. And thanks again for watching, and I'll see you in the next one. All right, bye.